Hey everybody, this is Jolene Moore presenting today a wonderful market update for what's going on in the mortgage industry. Jolene's the senior loan officer at Main Street and has been really a proven leader to us and to the mortgage industry and to the agents that she serves. So with no further ado, Jolene, take it away.
All right, so thanks to Everett. Sorry that we're not able to get this live, but we wanted to just go ahead and record it, and then we'll share it with all of you so that you can kind of give you an update. And then if you do have any questions, once you have a chance to look it over, then shoot me an email, text me, call me, whatever works for you, and we will do our best to try and help clear up any questions that you might have, since we're not able to do this live due to some Zoom issues. Okay, so go ahead and change, Cindy. All right, so what I was going to do, last week I did one and kind of gave you just like an overall view of like where are we, currently, and what I'm going to kind of do in the coming weeks is just update you each week of what's might have changed, since last week, anything new developments, and just kind of maybe update you on, other items that, just still evolving. So interest rate wise, we're seeing a little bit more calmness in the sense that we're not seeing spike where, rates are super high and then super low. I'd say that, we're still, I'd say right now, it just depends on the program and the scenario. You're probably going to find mid to high threes, low fours, just again, depending on the situation. So it's just worth having a conversation with the lender to figure out, if you have a client that's looking to pre-approve, get pre-approved or has in the past, that they want to just check in and see where things are before they make an offer. Because unfortunately, if they got pre-approved a month ago, rates are probably different than they were then. And so they just want to make sure that they're aware of what their, what the situation is and what their conditions look like now before they go ahead and make that offer. So another thing that's come about that's been really prevalent in the news, but also a lot of clients and agents have been reaching out to me about forbearance of mortgage payments. So I did a video, I sent it out to my database of realtors. I also sent it to my database of past clients. And I wanted to just explain what that meant. So forbearance does not mean forgiving the monthly payments. Unfortunately, what it means is that, they're allowing you, a borrower to skip potentially 3 payments, meaning not make those 3 payments when they're currently due. But what it doesn't, that the act did not clearly define is what that means of when they're going to be due. So, and it's going to all be up to the servicer that they currently have their mortgage with. So that servicer is going to determine whether or not those 3 payments are going to be due on the 91st day, after that 3-month of forbearance, or are they going to tack it on to the end of the loan? There was no clear, designation and description of what that really means. So it's up to the servicer to figure it out. So what I recommend to my clients and to your clients is for them to have a conversation with the servicer to figure out, what does this mean? Are they going to, how are they going to handle the payments that you're missing? Are they going to be, due that 91st day after that 3 months is up? Or is it going to, be tacked onto the end of the loan, or spread out over, having larger payments for a period of months to catch them up? So they want to find that out. 2, they want to find out and make sure that they're not going to be counting them as late during that time period. I had some clients last year, when the government shut down at the beginning of last year, they went into forbearance, and then unfortunately their servicer reported them late to the credit bureaus, which they shouldn't have. So it was an error, but we had to then go back and get it corrected. So if you do have clients that go into forbearance, make sure that they're monitoring their credit to make sure that that's not happening. And then 3, they are not able to refinance when they're in a forbearance. So if it gets to the point where, our market is improving and we're seeing super low late rates and they want to be able to take advantage and save some money that way, unfortunately, they'd have to come out of forbearance before we could move forward with the refinance, which means they're going to have to catch those payments up and make themselves current. So because what happens is when the loan goes into forbearance, they're reporting it on the credit report saying this loan is currently in forbearance. So we know when we run the credit that it's on there and that they're in a forbearance. So we're going to have to require the client to get out of forbearance, which means the payments are going to have to be, current in order for us to, and we're going to have to verify that. we're going to get an updated payment history from their servicer to make sure their payments are on time, considered on time, as well as that they're now current and totally caught up with what required payments, are out there. So those are some just things that I would recommend that you're aware of. If you're in my database, you would have gotten an email today with that video that you could share with your clients. You could also then, I also, if we have any past clients together, I also sent out a video to my database over the weekend, trying to clarify some of these questions that people are having regarding that. So again, if you have any questions regarding it, follow up with me and I'm happy to answer any questions. So another question I get quite a bit is government bond jumbo loans. So one, Wells Fargo announced last week that they are not doing jumbo loans right now. They've put a pause on it basically. And I thought it was for correspondent lenders like ourselves. But then I also had a client that said they reached out to Wells Fargo directly and they were also told that they weren't doing jumbo loans. But I had another one that reached out and they said they did. So they might be kind of picking and choosing when you go straight to Wells. But on our end, for correspondent lending, they have put a pause on it. So jumbo loans in general right now are very challenging. So if you have any clients that are considered jumbo loans, have them give myself or a lender a call. There's ways for us to strategize to try and help make it still work and maybe not do it as a jumbo loan, but still allow them to move forward in purchasing a home. So jumbo loans are definitely a challenge right now. Government loans are still not priced, where they normally are. They're usually one of the better priced loans that we have with VA and FHA. Those are still a little bit challenged right now. There's just not investors on the back end that are wanting to purchase those. So those are, again, loans that you want to just check in with the lender and see where things stand for them. Bond loans, one thing I just wanted to kind of explain to you what a bond loan, why there's challenges for the lender side of things is in our area, the most common is VHDA, right? Virginia Housing Department Authority loan. What VHDA does is, when we close the loan, we verify that they're employed, their verification is intact. Their employment is intact by a verification of employment. What bond loans do that no other loan does is when they get ready to go and buy that loan, they then go and re-verify the employment to make sure that they're still employed. So say we close a loan and then that client is furloughed or loses their job within the time of the closing, and then when the loan is supposed to be bought by VHDA, that then can cause an issue because that loan is now unsellable for us, which puts lenders in a riskier position. So that's why with bond loans, we have a little bit tighter guidelines for those, some reserve requirements, things like that. So again, if you have clients that are considering VHDA, you want to make sure that they're reaching out to the lender to go over, what those new requirements may be. And one, confirm the lender is still doing bond loans because there are some that aren't doing them. And then two, if they are, what do those guidelines look like now, and make sure that the client still meets those guidelines. All right. Again, if you have any questions on those, reach out to me. All right, Cindy, you can go. So deferred payments on other types of credit. So I just wanted to mention this because I've had some clients as well as realtors that have mentioned to me that, one realtor I talked to last night, her car loan, people are allowing her to defer 3 months payments and they're going to be tacking it on at the end of the loan. So, there's credit cards I know that are also allowing you to skip payments right now. And handling it. And each of those are able to handle it, within their own business and their own company. So you want to, if that's something that you have clients or yourself that are challenged with right now, then I would say you could reach out to any other creditors that you may have and figure out what those situations might be and if those are possibilities that could help you during this time period. Furlough and unemployment. One thing that we have instituted in our company, and I know a lot of other companies are doing this well, there's also something they're signing at closing, but we are sending an email during the transaction that says we are confirming right before closing, we are confirming that you're still employed and that you're still getting paid. Because, some clients may be furloughed, which means they're still employed, but they're not getting paid. So we have to confirm that they are employed as well as getting paid. And before we go to closing. So just keep that in mind too, if you have clients that are thinking that may happen to them, that they may not, might want to put a pause on purchasing right now until they know for sure that their employment is going to be secure. So that's, and then there is also a document that they sign at closing that's reconfirming all of that information as well. So these are some changes that are happening, in our industry to just make sure that we're covering, ourselves as well as the client, to make sure that everyone, is fully aware of what's happening. E-closings, which means that we're able to sign all the documents electronically potentially, is something that we're working on. So we're getting closer and closer to be able to do that. So I'll keep you posted on that, but just know it is something that's in the works. Tax transcripts, I mentioned this last call. Excuse me. The IRS, what we normally do during a transaction is we get a 4506T. It's a form that we have that they get the borrower sign, and we send it to the IRS to get a transcript of their tax return. The IRS is not doing that right now due to what's going on. So some loans don't require the transcripts, but when we do have a loan that requires the transcript, we are requesting for the borrower to get it directly from the IRS, because they do still have the ability to do that. So just be aware of that, that we may be asking the borrower to get that document for us. So if someone mentions it, you just kind of know what that means. Appraisals, just updating you, pretty much all loans now, except for whatever, jumbo loans might be out there, are allowing drive-by appraisals. We're also getting property inspection waivers, which means we're running it through an automated system of Fannie Mae or Freddie Mac, and it's letting us know, whether or not we have to get an appraisal or whether or not we have a waiver and don't require an appraisal. We are seeing it on lots of different types of loans, of course, rate and term refinances, but even cash out refinances and on purchase transactions. So it just depends on how much data that Fannie Mae or Freddie Mac has on that community and that property, and whether or not they will provide that waiver. And it's not anything we can do to get that waiver. So just know that, we run it through the system and it tells us yes or no. I will tell you that I had a situation yesterday or this week that, we had a refinance. We got a property inspection waiver. We're due to close this week. We wanted to increase the loan amount a little bit so they could bring less money to closing. When we increased the loan amount, we lost the waiver. So we then went back to the original loan amount and were able to get the waiver back. So these things can change too. So it can be an evolving situation. So just know that we're doing our best and trying to make sure that we're managing that for the clients. Okay, change. This I'm just bringing up again. I had this on here last week, and I just wanted to remind everyone, that what we're going through does not mean that this is going to be a housing crisis. We're obviously, going into a recession, but you can see out of the past 5 recessions that we've experienced since 1980, 3 out of those 5, we saw housing prices increase. I talked to a lot of realtors, and many of them are telling me that the market is still very strong, that they're still doing a lot of business. That they're, showing homes, and that their listings are going under contract very quickly, with still multiple offers. Not as many as we would see, normally at this time of the year. But I do see that the housing market is still moving forward. I think there's, of course, a lot of, and that can keep evolving, depending on the length of how long this goes for us. But just know that there's still business out there, and just to keep, doing what you need to do to stay in front of your sphere to make sure you are at the forefront when they are thinking about potentially doing this. All right, go ahead and change. So something to think about. So I was talking to an agent, and I was thinking, we're trying to put some systems in place for us right now, because it's a great time to kind of think about what do you want to do with your business. What are some systems that you could be utilizing to help you be more efficient, to be able to share more information with your clients and your referral partners. But also right now, of course, we want to keep cost in mind, right? So if you think of those 2 things, a cheap way to do that is create a YouTube channel. So I do a lot of videos. A YouTube channel is something that we've been working on and adding to, over time. But videos, obviously we all have phones, we all have iPads. We can easily create a video. There are apps out there that are for free that you can use to edit those videos. And one thing I'll say is that during this time, I've been trying to do more videos, these webinars. I'm doing a Facebook Live with a realtor. is basically just sharing information. So anything that you can do to help your database, to help your sphere of people stay, educated, and also just give them, information as well as knowledge and ideas. This is what we want, what you want to be doing now. So think about getting creative and, making videos. You want to make phone calls, Zoom meetings. Obviously, we had some issues with ours, but, just trying to stay in front of people as much as possible. All right, go ahead. YouTube channel, doing Facebook Lives, as well, because I know Facebook Live and the algorithm for Facebook, it has a lot of good traction. So thinking about doing some Facebook Lives with you can interview people, you could, show homes, just various things that you can share with your sphere. The one thing I will tell you too with Facebook Live is a lot of us have business as well as personal accounts. I have found doing it on your personal account is better than doing it on your business account, just because we tend to have more friends on our personal page than we do have likes on our Facebook or our business page. So what you can do is do the Facebook Live on your personal account and then just share it to your business account, because it becomes a video after that point. So that way you can try to get as much traction as possible while you're doing the live, and then just share it to your business page after that. Again, I mentioned this last week, but just it's something worth reiterating is strategies on how to, go above and beyond when this lifts, and how you're going to be able to separate yourself, when there are, when this does open up and we have a lot of listings potentially at one time, you want to think about some creative ways of what you can be doing at that point. A great time to take advantage of training. There's a lot of organizations that are offering training at reduced costs or no cost right now because they know a lot of people are at home. So really look and see what you can explore. I will tell you, I've had multiple conversations with realtors, and I would say the most you can do for yourself right now is to be educated, and that's, listening to podcasts, videos, reading articles, because the more knowledge you have, the more educated you are, the more you can share with your clients and your sphere, because I think that is a very valuable right now in our world. When I send out articles, I get a lot of feedback saying, thank you so much. It's so helpful for me to know. And it's always good to hear from you, directly of what all of this might mean. So really making sure that you're listening and reading and watching anything you can to make sure you're educated. And I'm not talking just about the numbers like of COVID-19 and what the trend is or where the curve is. I'm talking about, all kinds of different things that we can be sharing. How can they be helping their kids right now in this environment, when everyone's at home? What can you be doing health-wise? There's so many things that we can do and be sharing with them. So last time I shared, there's this John Krasinski from The Office has a Facebook page, and he started this thing called Some Good News. And it's really cute. He had one episode that I shared last week, and he's had a second episode. So there's the link there. Go check that out. And it's just something fun and just can brighten your day. So check that out. All right, go ahead. I shared this, I mentioned this last time, and I want to just keep sharing it. So we have a virtual tip jar that we started. Would love for you to help us get that out and share. And what that is that we've created a Google Doc where people can go in and add their information to the doc, and then we can share it and get people to donate to them. So it hasn't got a lot of traction, unfortunately, and I really would love for it to, because I just want us to reach as many people as we can to try and help, those in this time. So if you can share that for me, I really appreciate it. Think about also, do you have other, older clients in your database that you could be reaching out to just see how they're doing? Do they need groceries? Is there any, their lawn mowed, anything that you could be doing right now to help? Again, at a, not costing potentially anything, but just giving back to them and checking in on them and see what, what they may need. And then do you have other people that you go to regularly? Do you get your hair done, your nails done, a barber shop, whatever it may be, think about them and just check in with them. Even if you can't help them financially, I think they just appreciate this people checking in with them and letting them know that we care. I think that's the biggest thing right now is just staying connected and letting people know that we care, and that we're there for them. If they need something, we're there to help. All right, go ahead. So this is just some information that you can, there's that link is just letters that are written by the Mortgage Banker Association, and just, information you can kind of, if you're extra time, look and see what's going on and kind of what they're advocating for, to give you an idea of where the, the market, what the industry is doing and what they're trying to help and get more help on, and writing letters to, to various higher level people to try and get that action moving forward on those. The other thing is I really do enjoy Brian Buffini's podcast. He has some good people on there and just good information. I'm not, a member of Brian Buffini or anything like that, so I'm not trying to support him, other than just, I think he does put valuable information out there, and his podcast is enjoyable listening to his Irish accent, and he's funny. But he did an interview with Lawrence Yun, who's the economist for the National Association of Realtors, from March 17th. So it's a little dated because we're obviously into April and things keep changing, but I think it still has valuable information that can be, helpful in where we are right now. He also did an interview with the current NAR president, and leading in a crisis that just came out last week. So you go to a podcast app, and look up Brian Buffini, and you can get, find those episodes. So hopefully this is giving you some information, giving you some knowledge that can help educate you and pass on to, your database and sphere. Here's all my contact information. So if you do have any questions, feel free to reach out to me. I have a Moore team email. I have my personal email, my business personal email. My cell phone is there, so you can text me there as well. So just reach out if you have any questions. I hope you're doing well and staying safe and healthy. And we'll be back next week and give you additional updates of where we are. All right. Thanks so much.